Hello everyone, welcome to the session. In our previous session, we would have learned about the roles of accounting. What are the roles that the accounting department plays in an organization as a whole, in a country, and for an individual as a profession, everything. Now we're going to start with the most important part in accounting, the basic term. So basic terms include the terminologies that we will use in accounting throughout the whole our life. In wherever we deal with accounting, these terms will exist, so it is imperative that we should understand these terms very well. So first thing is entity would mean something that has a definite individual existence. So there are three things that in here. Entity should exist. A past entity is not considered as an entity right now, and it should be an individual. So it could be separate. It should be able to be separated from other entities of its kind. And third one, it should be definite. It should not be changing or invariable at the time. So that's the common parlance of what an entity means. When it comes to accounting, entity is a specifically identifiable business enterprise. So a separate business enterprise is called an entity. A business enterprise could mean a business organization, a company, a partnership firm, association of persons, body of individuals, joint ventures, a government organization, a bank, a financial institution. Even the CBSE and Reserve Bank of India are called entities. Therefore, this separately identifiable business enterprises, whether they are for profit motive or not for profit motive, whether they are present inside India or outside India, are called entities. Generally, we call them organizations or business enterprises, but in accounts, the word entity is being used to refer to them. Second one, transaction. Every event involving transaction of money or money's worth between parties. So, for example, there should be more than one people. There should be at least two people, and there should be an exchange of goods or services, that is of money's worth. There should be an exchange of goods or services, that is of money's worth, and there could be even a transaction of money on both sides. And any transaction of money or money's worth between more than one party is called a transaction. So for example, you could exchange your books in turn for something else. You could exchange your pen in turn for a chocolate, something like that. Any exchange between money or money's worth is called a transaction. So that kind of transaction that is happening between the entities that we have seen above is called the transaction with respect to the accounting parlance. So in accounting, a transaction means when two entities come together and they involve in exchange of money or money's worth of goods or services. So for example, purchase of goods. If one entity purchases goods from the other entity, it is a transaction. And for in turn, if the money that is for the purchase of goods is being paid by the first entity, it's also a transaction. So the payment of cash, sale of an asset for money, all are transactions. Assets. Asset is a resource owned by a company to be used in the normal course of business. So resource would mean something that is of some value to the company. So to acquire that value in the first place, a company may or may not pay something in return. For example, if a company wants to purchase a land, a company might get the land for free, or it should pay some kind of money for money to acquire that land. So that kind of resources that the companies acquire in the normal course of business are called assets. So the assets are kept to retrieve some economical benefit out of it. The economical benefit would include if you are keeping an asset such as a land, the economical benefit would be that you can conduct your business on the land. You can use it to build a production unit. You can use it to build an office or something like that. So that is an economical benefit. Or if you have a car, that is also an asset. Economical benefit arising out of car is that you can use the car to transport between two locations. So that's the benefit from that car. So it is useful in calculating the net worth of the business. In almost all the cases, the amount of asset that a company holds is what that gives the company a value. So if a company has a lot of assets in place, it means that the company is worth a lot. Therefore, it is used in calculating the net worth of the business. So there are two types of assets. Current assets. Current assets means whatever the assets that is used up within a year. What could be that kind of asset means cash. Cash could be used up in a day's manner. Cash is an asset. It is a resource. It is used to reap economical benefit out of for the company. And marketable securities means anything that is not cash, but you can sell it for cash. Example, let's say if you have a coupon. Coupon is something that is like a discount measure. It is used for if you are purchasing something. If you use the coupon, you can get special discounts. So that is also a security. And if you use if you are able to convert the coupon within a year, it is a marketable security. It means that you are using up that resource. So these are all current assets. There is inventory also. Inventory means nothing but the stock that the company holds. Like if there is a production unit and it needs to produce something, so for producing that, it will have some kind of raw materials. Raw materials means plastic, iron, whatever it is that is used to manufacture that kind of assets. So that kind of raw material is called inventory. Trade receivables is nothing but the debt that somebody else that owes you. Non-current assets are fixed assets. Fixed assets are also resources but that is kept in the business for more than a year. So if you use up a resource within a year, it is called current assets. If you use the asset for more than a year, it is called non-current or fixed asset. For example, car, land, building, machines, everything. All of these are resources. All of these are used for the business in its normal course. All of these are used to retrieve some economical benefits out of it. And all of these are used by any business for more than a year. Even if you involuntarily sell your car in less than a year, it is still called a non-current asset because a car in general is a non-current asset. It doesn't matter how long you use it.